Spark Protocol, $SPK, DeFi's infrastructure bet introduction. Spark Protocol is a foundational liquidity layer for decentralized finance. It came from the MakerDAO ecosystem, now called Sky. Spark aims to solve problems like fragmented liquidity and unstable yields in DeFi. What makes Spark special? A B2B liquidity engine. Spark is not a typical retail lending app. It functions as a business-to-business capital router. Spark borrows from Sky's multi-billion-dollar stablecoin reserves at wholesale rates. It then deploys this capital as a liquidity source for other protocols like Aave and Morpho. This makes Spark a partner to its competitors, not just a rival. Unique features. Its connection to Sky gives Spark major advantages. It has direct access to unparalleled liquidity. This allows it to offer stable borrowing and savings rates that are set by governance, not market demand. The protocol is also a leader in integrating real-world assets, or RWAs. It has partnerships to deploy capital into tokenized US Treasury funds from institutions like BlackRock. Key metrics: total value locked, approximately $6.8 billion. Annualized revenue, over $107 million in fees. Daily active users, an average of only 49. Monthly active users, an average of 863. The low user count compared to the high TVL shows its primary role as an automated, B2B infrastructure layer, not a high-touch retail product. The team behind Spark was developed by Phoenix Labs. The company was founded by former core engineers and contributors from the MakerDAO ecosystem. The project was funded directly by the Sky Treasury instead of venture capital firms. This aligns its development with the long-term goals of its parent ecosystem. Market performance: price, $0.067 United States dollars. Market cap, $111 million United States dollars. Fully diluted valuation, $670 million United States dollars. Circulating supply, approximately 1.7 billion SPK of a 10 billion total supply. The concerned systemic risk: Spark's greatest strength is also its biggest risk. The protocol is completely dependent on the Sky ecosystem for liquidity and governance. A failure within Sky would be catastrophic for Spark. Token inflation and treasury: the token emission schedule is heavily front-loaded. It releases 16.25% of the total supply in the first year alone, creating significant inflationary pressure. The DAO treasury is also poorly diversified. Over 73% of its $83 million in assets are held in its own SPK token, posing a long-term risk to its financial stability. Investment outlook: the provided analysis gives Spark a weighted score of 6.98 out of 10. The project scores high on technology, team, and partnerships. It scores low on risks, governance, and the quality of its user base. Spark is a long-term, high-risk investment on the core infrastructure of the Sky ecosystem. Price predictions: speculative models based on the analysis suggest these average prices: 2026, 78 cents; 2030, $2.60; 2035, $8. Final thoughts: Spark Protocol is a systemically important piece of DeFi infrastructure. Its deep liquidity, experienced team, and RWA integrations are powerful strengths. Investors must weigh these against its fundamental dependence on the Sky protocol, high initial token inflation, and low organic user base. Disclaimer: this report is for informational purposes. It is not financial advice. The cryptocurrency market is highly volatile and carries significant risk. Conduct your own research before making investment decisions.